Data released over the European session. What are the key items that have caught your attention?
Well, there wasn't really much in the way of actual natural European data, but there were a few interesting stories and points around. So first of all, the Federal Reserve's Charles Evans was speaking at a conference in Stockholm, and he gave a very dovish comment, really, saying that there was no compelling reason for rates to rise in the US in 2015, and that a zero rate policy they've got at the moment is not too easy, and inflation is too far from targets. So you read into that what you will, but as you're well aware, I don't believe that we will see a rate cut, or rate rise rather, from the Fed in 2016. Mr. Evans seems to be backing that up. I'm sure other Fed members will take a different view.
Yep.
And people must make what they will of it, but I think that's quite an eye-catching headline. And then a little earlier in the morning, we'd had industrial production figures from March from Japan, down minus 0.8 versus a minus 0.3 forecast, and a similar read in March. Just yet another negative data point in Japan. Factory orders were apparently better, but I just don't like the look of that. And then also staying with the Asian theme, in the absence of European data, we had new home sales data for April from China. Prices fell 6.3% year on year. There was a slower rate of decline if you look at the month-on-month data. Nonetheless, house prices, or property prices, were falling in 48 out of 70 cities in China. So,
interesting.
Yeah.
So in terms of this interest rate, this seems to be everybody's theme. Okay, when the markets are bored, they're always blaming the Federal Reserve and not understanding the interest rate cycle.
Well, I mean, I suppose it's a moving target to some extent, but the truth is the Fed is reluctant to tighten too early. It doesn't want to repeat the mistakes of 1937, 1938, when it made a false start, if you will. It started to raise rates and then had to reverse policy. What they found then was that cutting rates then didn't have any kind of positive effect. So they rather, perhaps, I suspect they'd rather move a little bit later, be a little bit behind the inflation curve, if you will, than go too early.
Understood.